Good morning and welcome to today's presentation with Nolato and the Introduce Investor Days. My name is Eric Castle and I'm an equity analyst at ABG covering Nolato. And with us today we have the CEO, Wahlquist, and the CFO, Per-Ola Holmström. We'll have a 20-minute presentation followed by a short Q&A from me. With that, I'll leave it over to you.
Thank you and welcome. We will start our presentation on actually page 3 since you can see us in picture anyhow. So just to summarize Nolato in brief, we are of course working as a development and production partner of polymer product systems, founded in Torekov in 1938, been on the stock exchange since mid-80s, and latest thing was that we acquired a US-based company called GW Plastics, and it's now included in our earnings per 1st of September. Our group consists of 3 business areas. We have the medical solutions, approximately 39% of sales. We have integrated solutions, approximately 38% of sales, and industrial solution at 23% of sales. Some key ratios, including GW pro forma. We have then net sales of approximately 10.5 billion Swedish and approximately 7,200 employees. Turning to page 4, something about our business concept. Of course, a high-tech developer and manufacturer of polymer product systems. We are working in 3 different business segments as explained. They are completely different, but we have a lot of things that bring us together, creating a lot of synergies. Of course, we work with the same raw materials across all business areas. We work as a solution-oriented development partner and can gain knowledge and skills from the individual business areas and transfer them across markets. The production technology is the same across the different business areas. So we feel that we gain a lot by being in the 3 different market segments, but with the same core technology behind the scenes, giving a lot of advantages to our customers with transferring on technology and specific skills built up in the individual business areas. If we turn on to page 5, describing a little bit about our journey. We are on a long-term journey from, if we go back maybe 10 years, we mainly work with mobile phones, smaller industrial and medical, more of a supplier, and we had a leading position in Sweden, and we started developing our position in Asia and Central Europe. Today, we are a solution provider to partners that are global high-tech companies. We have a balanced group with medical, industrial, and integrated. Mostly work as a partner to our customers, supporting them with the strategic development and production of core things. We have a global footprint. We are strong in Asia and Europe, and we used to be weak in North America, but since the week, we have a strong footprint on 3 continents. And we have an overweight to medical, which is our direction for the future. Turning to page 6 to give some basic information about GW Plastic. This acquisition is all about delivering our strategy. We have this long-term strategy, and GW Plastics fits perfectly into that long-term strategy with a very strong footprint on the United States and North America, focusing mainly on medical. This company was founded in 1955, has been a family-controlled company since mid-80s. They have a headquarters in Vermont, total of 7 production facilities in the United States, Mexico, China, and Ireland. They are an industrial leader in complex injection molding of thermoplastic and silicone solutions. We see a high degree of innovation, extensive engineering, and technology know-how in this company, and it will fit perfectly into the Nolato corporate culture. Turning to page 7, showing the Nolato geographical presence following the acquisition. And as you see on this picture, we have now a very strong global footprint, with a very good spread on the North American market, European market, and Asian market. So we have a solid global position on the 3 key continents, creating significant market synergies for us. Turning to page 8.
Good morning. The annual sales of the GW Plastics is 1.8 billion with an EBITDA margin of 7%. The company has about 1,100 employees, and just over 4/5 of GW Plastics business relates to medical, and the rest will be within industry, which is mainly automotive. The company has a diverse customer base, the largest customer standing for about 20% of the sales. It is and has been a growth-oriented company, achieving an annual growth of about 10% over the past 10 years.
If we then turn to page 9, focusing a little bit on the Medical Solutions business area. In the Medical Solutions business area, we have a global expansion strategy, and we've been growing this business area continuously for the last at least 20 years, year by year, achieving a strong organic growth combined with, of course, some acquisitions from time to time. If we look on the 6 months, we have a little bit more than 1.3 billion in sales, an EBITDA margin of close to 14% for this year. Turning to page 10, going down a little bit deeper on the Medical Solutions. The position is we have good growth with maintained profitability. We have a very strong position with leading global customers, and we focus on the top pharma, top med tech companies across the globe. We have a global presence, and our customers, of course, you see a list here, and it's all major pharma and med tech companies. Q2 sales, 700 million, an EBITDA of 100, creating an EBITDA margin of 14.3%. And on the picture, you see the GW sites in combination with the Medical Solutions sites across the globe. If we turn to page 11, here are some of the focus product areas that we are targeting. One big area that we think is very interesting and has shown a good development is drug delivery systems for drugs, and it's an area where we think we will see continued growth with the large molecule bio-based drugs coming, creating the need for advanced auto-injectors and things like that. Another area which we are focusing a lot is in vitro diagnostics, which is, of course, automatic diagnostic test for all kinds of diseases, including, of course, COVID-19. Cardiology is very important. It's pacemaker, implants, and those kind of things. Continence care is a huge market, very interesting for us. And then, of course, pharma packaging. If we turn to page 12, focusing on integrated solutions. The strategy within integrated solution is to expansion for our business into new market segments. So formally, if we go back maybe 5, 6, 7 years, our market was the telecom market, mobile phones and networks. But over the last 5 years, we've been expanding ourselves into other areas of our interest with similar demands as the mobile phone and the networks. This year, of the accumulated first 6 months, we have 2 billion in sales, an EBITDA of 277, creating an EBITDA margin of 13.8%. If we turn to page 13, here is a brief introduction to the integrated solution. We are a development partner, a differentiator provider, and supplier of mechanical models and finished box build pack consumer electronic products. We are steadily growing within EMC and thermal solutions. Our position is we have a strong partnership with selected customers. We have a very unique expertise in technology and cosmetics, an excellent skill in product management and flexible production. And below you see some of the customers within this area. Our sales was then in the second quarter this year, a little bit more than 1.1 billion Swedish, and then EBITDA of 166 million, creating a margin of 14.4%. We have seen over the last year a strong growth in this area in what we call VHP, vaporizing heating products. If we turn to page 14, you will see a split up of the integrated solution business area. So the largest portion of this is consumer electronics, where we do a lot of box building and advanced modules for consumer electronics. The largest portion of this is VHP, the vaporizing heating products, but we have connected Wi-Fi systems, we have wearables, we have mobile phones, we have all kinds of different devices that we are producing and developing for our customers. And on the lower part, you see EMC and thermal business. This is shielding solutions for electromagnetic influences amongst electronic components and thermal management of electronic devices. This is an interesting possibility for us. We used to be 100% network on this, but we have over the last years in this area also spread into other areas. If we turn to page 15, the growth strategy for the EMC and thermal, it's new market areas. We see a lot of possibilities within the automotive industry with more connected cars, electrical vehicles, creating a need for those shielding and thermal solutions. So we see all kinds of different new areas. We are very strong in the mobile phone, the network and telecom industry, but now we are sort of building up a position in other areas. Turning to page 16, looking into industrial solutions business area. In this business area, we are in the technology and geographical expansion journey. Last year, first 6 months sales this year was approximately 1 billion Swedish, with an EBITDA of 58 million, creating a margin of 5.6%. We have had an impact during the first 6 months this year of the COVID-19, affecting mostly our automotive part of this business, which have had a shutdown during a period of time during the first half year. If we turn to page 17, look into the industrial solutions. So here we are a leading development manufacturer of products and polymer systems for customers within automotive, hygiene, packaging, gardening, forestry, white goods, furniture, and other selected industrial segments. We have a very strong position in Scandinavia and Central Europe. We have cutting-edge technology offering, and we have partnership with selected customers. And now we get a stronger possibility on the North American market with our GW acquisition. So second quarter sales, 459 million Swedish, and an operating profit EBITDA of 11 million, creating a margin in second quarter of 2.4%, strongly affected by the COVID-19 situation. Turning to page 18, if we look into the business industrial solutions business area, we have two parts. We have the general industry, which is the largest portion, with the white goods, the packaging, the hygiene sectors, and then we have the automotive, which is mainly then the Scandinavian automotive market, approximately 40% of the business area. Turning to page 19, and something about our strategy and positioning ourselves towards a global high-tech partner. And we have a process for partnership selections. So we focus a lot on when we select new customers on the growth potential, the long-term relation and corporate culture of the partner, the global reach, of course, geographical match. And we are expanding our footprint by expanding the addressable market and further potential with the existing customer and further potential with new customers.
Page 20. On the left side, you can see a summary of Q2 numbers. We had sales of about 2.3 billion and an EBITDA of 269 million, giving a EBITDA margin of 11.7%. On the right side, you can see our sales development for the group during a long time period, and during that time period we have seen growth of about 20+%. About half of that is acquisitions and the rest is organic growth. Page 21, we can see our 3 targets we communicate. We should have a target, an EBITDA margin of more than 10%. We have a cash conversion target, meaning more than 75% of our EBIT result, and we should have an equity asset ratio exceeding 35%. And as you can see, our 2019 numbers, the last ones, they are exceeding those targets. Page 22. These are our 3 headlines for our sustainability strategy: creating business opportunities by greener solutions, managing Nolato's sustainability aspects in a proactive way, and we should be accountable. On page 23, we show development of 3 important environmental figures, which is energy consumption, carbon dioxide emissions, and waste volume. And as you can see, the lines in all 3 of these, they are going in the right direction. Page 24. On the left side, there are our largest owners. The 2 first, the Jorlén and Boström families, are the founder families of the company. And then we have a list of a combination of Swedish and foreign financial institutions. About almost 40% of our shareholders are from foreign countries, and we have a bit more than 11,000 shareholders. On the right-hand side, you can see the share price development during the last 5 years and our dividend during 10 years.
On page 25, we sort of summary our journey. The Nolato is constantly on a journey, and we are right now, I would say, taking the next step in that journey by completing the acquisition of GW Plastic. And our future focus would be to be a worldwide solution provider with an overweight to medical and with a strong footprint on the 3 continents. So that's sort of summarized Nolato and our continuously journey.
Thank you very much, Christer and Per-Ola. So, firstly, I find it quite interesting that you have changed the forward strategy to overweight medical. Could you perhaps go into some more detail on why you have decided to focus on this segment over the others?
I think it's not a change. It's something that we've been communicating for a period of time, but the driving force behind that is that we see that the combination of the 3 business areas is excellent, but with our long-term focus, building step by step and creating a very strong medical for the future is the right thing for our corporate culture and what we can see. medical is very conservative, built step by step, very, very, how should I say, long-term business. And since we are an extremely long-term focused company, that fits our culture very good. And we have built over the last 20 years a very strong footprint and a reputation within the medical market, and we see that we will continue to do that.
All right, thank you. And medical solutions have consistently had a higher margin than the other segments. Could you walk us through how you have been able to sustain this?
I think with our partnership approach together with our customers, always trying to create win-win situation for the long term, being accountable and helping our customers to be better than their competitors by creative solutions and so on from our side. And then, of course, creating that value gives us the right to have those margins.
Okay, so one last on medical and margins. The acquisition in medical solutions of GW Plastics will initially be margin dilutive, but you have a goal of increasing it towards segment levels, I believe. Could you perhaps talk about what can be improved with the business and the process of implementing these improvements?
Yes, first I can do a sort of a historical back view. Over the last, I would say, 10, 15 years, we have acquired a few medical businesses, approximately one every second year or something like that. And as a general rule, we have seen those kind of margins in those acquisitions that we now see in GW Plastics. And we have been able to sort of get the same, how should I say, Nolato standard margin on those companies over the years. And I think it's our way of creating value for the customer that gets us in that position. And also our strong focus on efficient manufacturing, always try to identify possibilities to drive away cost and share that with customers, creating possibilities to create, again, win-win situation and enhancing our margins.
Okay. You have a large volume volatility in the integrated solution segment. Why is this the case, and how are you working to combat this going forward?
Yes, we've been in what we call now integrated former telecom, and over the last 20 years we have seen this volatility. And it's consumer electronics is a much faster moving market than normal industrial and of course medical. Creating swings in volumes and of course stock movements and so on, creating this volatility. But we have also shown over the years that we can, with our flexible production structure, make sure that we make money even though volumes are volatile.
Okay, and also on integrated solutions, you've had high growth in heated tobacco products in the last quarters, partly due to inventory buildups, as you've stated. What's a more normalized growth for the heated tobacco products?
The market of this VHP, as we call it, it is a growth market on a global base where we see growth across. And we think this is an interesting market to be part of. Of course, there are different solutions, different type of devices supporting this. So how the market is growing in a good pace, and we will see individual swings over quarters with stock build-up and so on. But we think it's an interesting market, and the market is growing, and we have a good position in this market. But of course, which device and which partner will create which type of growth, we don't know exactly.
All right. And still, after this acquisition you made, you still have a very low net debt to EBITDA and significant room for acquisitions as we see it. How does the acquisition pipeline look at the moment?
We are continuously looking for acquisitions. If they create value and 1 + 1 is more than 2, that is our long-term strategy. And we are looking at other medical, of course, and also combination of medical and industrial. But it has to bring value to the total picture. That's always been the case.
All right, thank you very much. I think we have reached our time limits and we'll have to end right here. And again, thank you very much.
Thank you.
Thank you.